Welcome to the trade recap for the week of January 10th. This is the second week of my small account challenge. We're going to jump right into the tickers. The first setup we're going to look at is NVDA on January 10th. NVDA had some consolidation above the 270 level right here. See that support line, and on January 10th it started breaking below that. So shorting in pre-market around 270 and anticipating it pull at least 10 points. That was the trade here. I did really well on this trade and I exited near the lows, and NVDA ended up just ripping right back up. So a lot of the times on the big cap stocks, while they can have very big moves and continuation moves, they usually have a smaller move than a comparable small cap stock, and then they just go back to new highs. The next stock we're going to look at is DWAC. So DWAC. Now this was actually on January 12th, and in this case it had a multi-month breakout with volume. You can see this green candle here. The stock topped off at 66.3. Then the day before it topped out at 66.2. So our breakout level here is 66.3. Right about there. That's our breakout level. Now if you look on the actual chart, what happened was really choppy price action. It broke past that level in the morning, pulled back aggressively, then made a new high after the initial morning high, and then pulled back aggressively, and then actually started ramping from there. So the issue here was risk management. If you set your stop, say right here, and then you buy in right here, you'll get wicked out when it pulls down below your stop, then starts going back up. This was a very tough stock to trade, and for your targets, probably looking at under 77, under 75 to exit. So it didn't really push into the high 73s, high 74s. So even if you kept that in mind, you might have had issues with exiting at the levels that are ideal. Pretty good mover, former runner. This was a pretty good mover, former runner. So these can always run, but in DWAC's case, doesn't run as much as you want it to, or as much as you expect. It probably needed a lot more volume to do that. So quick 10 to 15% targets would have been ideal. When I was trading this, I got too aggressive. My targets were too big and my risk was too tight, so I ended up getting stopped out a bunch of times on this one. Now we're looking at the same day, in this case OBELF. Now this is a OTC first red day. During the actual trade, however, this was very illiquid. There was a lot of issues trying to get in, and for me personally, I just went ahead with it, but I ended up stopping out the day after this one. It did have a move, although it wasn't the move I was quite expecting. I was looking for something in the low fives, so 510, 520, that's where all my exits were. It didn't get there, so it was just too liquid to be a proper OTC first red day short. This setup has just been tough lately. It's been really tough. You don't see it a lot. It doesn't really happen. Hopefully it starts happening again, but I wouldn't bet my money on it. Then we look at the following day. Here I had this big pop in the morning, which stopped me out, I think, at the very top here, and then it just faded the rest of the day. But as you see on this daily chart, the following day after that, it grinded higher, and then the day after that it gapped up. So it's not an ideal trade, that's for sure. The next stock we're going to look at is BPT. This is our favorite Prudhoe Bay Royalty Trust, that is. And with this stock, it was a overextended first red day short. So when it started going red, because it ran up from 4s all the way to the 5s, that became a short. So you get in on the green red snap, which was about 550 right here. This was the green red snap. You get in there, and then you're risking probably the top of the bounce. My stop was very tight just because I knew that this stock could either just fall apart because it's lower float or it could rip back up. So very tight, very speculative, but I ended up taking a small loss when it crossed back up over red green. So when it popped here, I was out, didn't want anything to do with it just because I've played these lower float shorts before and a lot of times they just have these crazy squeezes. So this one wasn't that ideal, but it was a setup that you could have played. Okay, now we're moving on to January 13th, and here we're looking at the AMC breakdown below 20.8. So this is 20.8 level right here, and what's interesting, as you'll see, this was pretty much the top when it ran last February, or last January actually. This was around the top, so I consider this as a major key level, and it was the bottom when it had that big panic in December also. So I was treating it as a key level. I got in when it cracked 20.8, swung it overnight, ended up getting stopped out because pre-market, the market makers pulled it above 20.9 to be annoying. And what happened the following day surprised me because I thought there would be continuation down to the 16s the next day, but ended up pulling to the mid 19s and then ripping back up to 21. So it just shook everyone out and whipsawed, and the short ended up not having any edge, no follow through. Pretty surprising. I would have taken this trade every time, but it just didn't work out this time. Sometimes it happens, that's why we have stops. However, on GME, this stock actually did have a melt. So you could see the support level of 120 right here. If we could zoom out. In the past, it also tested this level before. It used it as a support level. So 120 is almost 120. So you can see why that level is so important. On the 13th, the stock didn't actually crack below 120, but on the 14th, it did. This was when AMC was chopping around, frustrating all traders. GME had the nice melt. So once it opened, it pushed up a bit and then it went back down. And this is where the short GME opened, it pushed down a little bit, then it pushed up, and on the 120 crack, that is where the short that would have played out would be placed. Now, obviously, before that, you might have placed a short right as the market opened, got stopped out on this pull, but you can always retry. Obviously, have a rule of how many times you can retry, but that's what I would have done. I think I did do that a little bit. I had a small trade, I think. And then on the big pull down, that's almost 8 points. So you could have played puts on the setup. You could have just shorted it, but it did have proper risk reward. It did have a nice fade. And it actually continued the following day. It went down to the 104s over the long weekend. So it opened where it closed, maybe a little lower, and then it just faded all the way to 104. So that's almost a 20-point difference. That's a big chunk. So if you capture these plays, you might be able to have great profits, especially if you're playing puts on them. AMC, on the other hand, the following day, let's bring that up. The following day, AMC also had a fade, but not as much as GME. Sometimes you don't know. Sometimes you don't know which stock is going to pull the most. Is it going to be the leader? In my case, I consider AMC to be the leader, or the sympathy, which I consider GME to be, simply based on their market caps. AMC is slightly bigger. And also, if we look at the float right here, AMC has a 500 million float. GME has almost a 50 million float. So I consider AMC to be a heavier stock, meaning if it does sell off, I assume it would sell off more because it's tougher to push it up. Then again, a lot of retail can change things. All right, guys, now we're going to move on to the journaling portion of this video. I hope you enjoyed the setup recap, and we're going to move on to journaling the trade recap. Enjoy. We're going to move on to journaling the trade recap. Enjoy. Alright, now we're getting into the journaling portion of the video. Now we're going to get into the journaling portion of the weekly recap. for the week of January 10th. And we're going to start off with the first trade of the week, which was on NVDA. That was a support crack short. We're going to check it out. This was a small win. Looks like it was a very good trade actually. So we're going to add the setup here. Support crack short. Sign setup. And we're also going to list under a crook put. I'm pretty sure that was actually has alert. Next trade BITO. Also on January 10th. Now I'm not sure what my intention here was. I'm just going to switch to hour chart. Looks like here I was chasing some weakness actually. Seeing that's just a bad trade on my part. Small loss. Who knows, I might have even accidentally placed that trade. So I'm gonna sign a mistake of not my setup. Next trade. Also on BITO. So I had the 24 strikes. Again, it looked like I was just chasing weakness. Not super great trading on my part. So yeah, I'm not sure what I was doing there. So that's also going to be under not my setup. And then let me assign that. Now pets is interesting because it is one of my setups for sure. But halfway through trading it, I realized it was just a China scam. So the way I'm going to handle it is I'm going to make a new setup here. So I'm going to call it, I already have a setup that's called halt down, so I'm gonna list it as that. And my mistake here is, I'm just gonna say falling knife, because all of these China setups are great shorts, terrible longs. It's really almost impossible long though. What happens is they start selling off and then they just don't bounce, they just keep selling. And if you watch any of Tim Lento's webinars, he goes over them in great detail. I wasn't aware that this was a China scam, so I got kind of did buying it. Luckily the loss is not that big. I'm gonna do the other two pets trades here. Now what usually happens when I trade, I do retrade stocks where I got stopped out and the setup appears again. But for panics, the maximum I do is 3 times. Because in the past, I've caught myself doing it a lot more, 4, 5, 6, 7, 8, 9 trades, and just having very big losses sustained by that. So in order to avoid that, I made it a hard rule where I don't try to buy more than 3 times. Next trade is a SPY play. Now this was just another strategy I was testing out, so we're not even gonna label that one. BBLG, this is a new setup I was trying out. Again, not my setup, small loss. I can live with it, but should be staying away from those. BITO again, not my setup. So it's looking like January 10th was a really bad day, and it was. I was actually tired that day. I was moving stuff around, very busy the day before, so I wasn't in the best headspace necessarily to trade, and I wasn't aware of that until I'm journaling right now, because right now I'm seeing how I'm doing all these trades, but none of them are good. None of them are good except for the NVDA play, but then I gave most of that money back with my subsequent trades. Okay, now we're moving on to January 11th, and again DWAC right here. Again, like, the only reason I was trading this is because it was such a big mover in the past and I just didn't want to miss out on the move. However, that ended up giving me a bunch of small losses, small to medium sized, I will say, because of my loss. My risk at this point isn't a lot. I would say the average risk is about $50. That's just a guesstimate. So yeah, this isn't even my setup and I'm trading it so aggressively. So a lot of these can be attributed to revenge trades on DWAC. Yeah, this whole day DWAC wasn't doing much actually, so this should have not have been a trade that day. Now January 12th, DWAC actually broke out, so that was the setup, but in these cases all before, too early. So I'm going to give another mistake. Those are all way too early. And all of these, all these losses combine. So they combine to, $120, $130. I'm taking paper cuts, but those are adding up. Finally, the day it happens, we have a multi-month breakout on volume. Good stuff. But the day it happens, my long doesn't go so well. And the reason it doesn't go so well is because my stop is a little bit too close. DWC is just very volatile and moves around a lot, so you can't have a tight stop. That's just been my experience with it recently. On its original run, you could have a fairly tight stop, but that was That was just one time. After that, its personality kind of shifted to where it was very choppy, moved up, very choppy, moved down, a little unpredictable. So right here we're going to have another multi-month breakout. These two, I believe I exited my options. I had $80 options. And let's see. Looks like I exited them pretty well. Okay, next stock is OBELF. Now this is a OTC first red day. However, this particular OTC first red day was illiquid, and so this OTC first red day was liquid, and I wasn't able to play it the way I wanted to play it, unfortunately. For this one, I'm gonna add it under not my setup just because it didn't meet my criteria perfectly. It was close, it was very close, but because it didn't, I can't list it under the first red day OTC setup. I have very strict criteria for that. The trade, I didn't use a lot of size. That's why my loss here is $30, which is less than my average risk. I wanted to try it out, it didn't work. It's fine. It would have been bad if I was overly aggressive and had a regular size position that I would usually play on this type of setup. BPT, this was a overextended first red day. It didn't work out. It was very extended, but it just hit my stop. I'm gonna see whether I have another setup I can list under. I'm gonna just search here. I'm gonna list on NASDAQ. I should probably merge those. Okay, next trade, same day. That was DWAC again. You can tell I didn't feel like I was done with this one. So this was a long, interesting. It looks like I sold into a dip. Yeah. And this was a multi-month breakout also, same day. So I'm gonna add it to the multi-month breakout as my setup. And the following day, that was the first red day listed, but it wasn't extended that much. And I feel like I just wanted to make money off this ticker so bad. I was willing to negate my criteria in order to do that. No, not good. Not good at all. And then January 13th. So AMC had a support crack of 20.8. That's what all these trades here are. 1, 2, 3. The support crack continued into the next day. So these are going to be listed on as a support crack short. And then also these should have worked out. They didn't work out, but it had a very clean break under its support. Then the stock went a little lower, then snapped back up and just kind of whipsawed a little bit and went sideways. So something that looked like a really good setup ended up not being it. The only thing you can do is to cut losses quickly. So that's all you can do. GME, same thing, but GME actually worked out. So both these are also support crack shorts. Same trade. The support on GME was 120 and it ended up fading, I think, to the hundreds. Okay, let's take a look at them. This one, yeah, it actually ended up fading from 120s all the way to 112s. Now this whipsaw past the morning highs did not help, and that's why I was done with it, along with AMC not working out. So this overall was a rough week. There were a lot of trades that I shouldn't have done. And as you can see, this is my week right here. So there's a lot of trades that I shouldn't have done. And if I section this by assets, you see my crypto if you separate this by asset class, my options were profitable, and then we flipped to stocks and not very profitable. So this is the second week in a row where I'm actually doing better with options than being positive, and then stocks give me negative. We're gonna hop into the calendar here. You see, Wednesday was really good. Thursday, Friday not so good. Usually don't trade that day because of lower odds on most of my setups, so that was bad. Okay, so that's about it. That's about it for the drilling aspect. Obviously, there were a lot of issues this week. A lot of trades that could have worked out a lot better. We're going to look at our overview right now, see how well we did. Now, this is not each day's loss. This is this day's loss plus previous day's loss. So this is all the loss on Monday. This is the loss of Tuesday plus Monday, Wednesday plus Tuesday plus Monday, etc., etc. So final day. This is the return. So here are a bunch of stats on it. And yeah, this week I overtraded for sure. Definitely overtraded this week. Okay, so that about wraps up the journal portion of the trade recap. I hope to see you next week in next week's recap. Leave a like if this was helpful, and I'll see you next time. Peace.